So with this humble background, we again welcome and I would request all to join your hands to welcome CA Nimit Gujarathi sir. Thank you, sir.
May I request to present a memento, CA Ketan Sayya sir and Fennel Bhai to come forward and present a memento to today's speaker. May I request Virat Bhai also to join us? With this, may I request our today's speaker to guide us on readiness, मार्च एंडिंग है, क्या क्या करना है, कैसे करना है, with this sir, over to you.
Thank you.
Good morning. At the outset, thanks for WRC for inviting me to give this lecture on preparedness and readiness for March 31st. It is a privilege for me to come from Pune to my birth city and give this lecture for the first time at WRC. Thank you, sir, for giving this opportunity. I will try my best to whatever years of practice I have put in or whatever knowledge I have gained out of this practice and try to give as much as possible to the wonderful audience that is present before me. Hope you will find it useful in your day-to-day practice, and whenever you any issues or any queries with regards to this, I am always there available for the progressions. What I have planned the lecture, today's lecture in 3 segments, that is what is with relates to financial book closure and accounting. What are the various So today's lecture is divided into 3 parts. What are the various financial and book closures requirement before 31st March? What are the various tax compliances? And what are the other routine tasks? And at the end, I have tried to add few slides with regards to how this is possible, because as sir told, day to day, the practice is becoming very difficult and very time consuming and very complicated. So just to give the background, few years back, our compliance practice was only pushing up the data. That is, whatever data we used to prepare, we used to push to the department or any of the website. Okay? But in last 5 years, the things have changed dramatically. Now, what change has happened? Lot of data is getting pushed up from the department. That is from the central database, either from the GSTN network or income tax network. Lot of data they are pushing to us and asking us to reconcile the data and re-push it back to the central server. Now this has changed the situation dramatically, because pushing the data on one side is very easy. Okay, you understood? Whenever I am just pushing the data, I am not worried what they are sending. What they were sending is just after 2 years, some scrutiny is coming up or some reconciliation work is coming. But when they are starting pushing the data on a real-time basis, things will become really challenging for us. Because now we cannot sit relaxed and wait for scrutiny notice or wait for some query from the department. Department is virtually doing something or other on a daily basis. So all of us, I think so everyone from here are in practicing, or everyone from the practice? Yeah. So we are all accomplishing this, or we are all aware that what type of information department is asking on a real-time basis. Now the real challenge is that only that how to cope up with this. And what I am trying to do in the today's session is just to make you aware how to get it, how to cope up with this type of situation, and what will be the future readiness required for this to handle all this complexity of compliance and reporting network. Should we start? And it will be an interactive session. Whenever you feel like any queries or we can answer it, or question answer section will be there at the end. So both time. And I want to be a lively, because just it can't be monotonous. I am just pushing the data. It should be again two-way. Okay? So let us start. So this is the roadmap of the seminar. So book closures and financial statement. What is book closure? Which relates to purchases, sales, expenses, other income and stock. Then taxation with regards to income tax, the trust and all that thing. Then ROC compliances, regulatory tasks, cross-reference with the Act and compliance with software. So I am trying to make it as simple as possible, as easy as possible for us to understand. So let us start with the purchases. Now why I am starting with the purchases? Because this is the, I think so this is the first entry point for any accounting aspect. So purchase will be the starting point for any of the businesses accounting. So let us see what are the things we need to understand for reconciling the purchases with regards to March 31st. So before that, the financial year, as we know that we are following two types of accounting system, that is mercantile and cash system. Just to have the background, mercantile will be on accrual. So all entries with regards to accrual has to be booked. Cash system, we professional normally follow cash system where only cash accounting will be done. Now let us start with the purchases. Now what is the normal procedure for purchases? What will be the first step to ensure that all the purchases are booked? What will be the first step? So all the invoices, so we need to understand the cutoff date. The cutoff date is for us will be 31st March. As on the cutoff date, whether all the invoices are received and booked in the books of account. Now when I say all the invoices received and booked, whether it means that all the invoices for which the stock is received or not. So imagine a scenario where you have received the stock but invoice is not received. So whether that needs to be booked in my books of account? Yes, because if the stock is received and if I invalidate the stock, obviously I have to book the purchases. In today's world, this scenario will not be have much, because in e-invoice scenario, none of the stock will be received without invoices. So this scenario will not be there in 99.99% cases. Only 1.01% cases sometimes stocks is received without invoice. Now what will be the aspect with regards to other way around? If invoice is received and stock is not received. Yeah. So that is again an administrative issue, that I have not received the stock because either it will be in transit or some verification is still pending and I have not approved whether the stock is as per my satisfaction. But the dealer has or the seller has issued me the invoice. Now what will happen in that case? Once the invoice is uploaded in the GSTN portal, it will be reflected against my GST. Okay, so even if I don't book the invoice, still it will be reflected in my purchase. Okay, so you have to book that invoices. You may say stock on approval or whatever nomenclature you want to give, but that invoices has to be booked. Otherwise, it will not get very tallied. Okay, so two things you need to understand. All the invoices which are generated in my name before 31st of March has to be booked in my books of account. Now the days are gone where I can shift the invoice to the next financial year, because otherwise there will be reconciliation issue with regards to GST. So all purchases invoice book in financials needs to be cross confirmed. All purchase needs to be reconciled with GSTR 2B. In reconciliation, following situation can come across. That is appearing in GST 2B but not in books. So these are the invoices which I have not booked but that are being reflected by the seller in my GSTR 2B. So seller has given the invoice, it has uploaded in his return, so it gets automatically reflected in my 2B. Now this invoices I have either not received. Now there are sometimes issues with regards invoice doesn't reach the account department. How many of you are facing this issue? Yeah. So it's a normal phenomena. Accounts department gets the invoice at the later stage after it goes all through the process. So this will become very critical with regards to 31st March. In between, during the financial year, you can manage because credit can be postponed or delayed in the subsequent month. But 31st March, you need to ensure that all invoices are booked because whatever credit is appearing as on 31st March cannot be shifted to the month of April. Okay, there are other repercussions to that. We will discuss that if that shift happens, what will be the repercussion. Okay, so that to be reconciliation is very important. I think so. In the present scenario, you need to book all the invoices, take whatever credit is available. Now, second is appearing in books but not in 2B. So these are typically the invoices which I have received, but my vendor has not correctly filed the returns. Okay, my vendor has not correctly filed the returns. Now there are no other alternative but to ask to vendor to get the return rectified. Okay, because department is very clear, if things are not appearing in your 2B, no credit is available. Okay, so we need to ensure all my vendors are filing their return properly and whatever credit I am booking in my books of account is properly getting reflected in my 2B. Otherwise, you have to confirm or get it verified or rectified from your vendor. Yeah.
What is your advice to the clients whether to book the ITC in GST or whether to take it as an expense in income tax?
So in terms of what? In terms of invoices?
Expense booking.
Yeah.
What is your suggestion to the client whether to take ITC in GST set off or whether to show it as an expense in the income tax?
In terms of expenses or in terms of purchases?
Purchases.
So purchases obviously you are taking credit or no, I didn't get your question.
Purchases have to be from sales. So say from in the sales, you have to pay in that set off will be available.
Correct. But whether to take set off against the sales or whether to show it as a expense.
Okay, so it's an accounting treatment what you are saying.
What is your view?
So my view is that in case of GST, you need not route it through P&L because entire credit is available. So it should be a balance sheet item.
Unless it is export kind of.
The export be also it is a so it should be a balance sheet item. Need not route. Only the reversal part, whatever credit is not available, that much you have to book as an expenses. Balance you should carry it to the balance sheet. It should be a balance sheet item rather than P&L. Now, what will be the issue in terms of if something is appearing in GST return invoices or GST 2B and I have not booked that invoice in my books of account? What are the repercussions in terms of GST? Whether there will be any repercussion in terms of GST? In terms of GST, there will not be any repercussion per se because I have not taken any credit. If I am not booking the invoice, means I am not taking any credit. So GST department will not ask me anything because they are not bothered if I have not taken any credit. But what will happen to income tax? What will happen in income tax? Any thought? No, see, I have not booked any expenses in my books of account. So there is no question of claiming any expenses. These are the invoices which are appearing in GSTR return. That is to be, it is getting reflected, but it is not showing in my books of account. So practically what I am saying is this invoice it doesn't pertain to me. When I am not booking it in my books of account, means technically I am saying these invoices are not pertaining to me, but vendor or some dealer has erroneously pushed it against my GST number. But what will happen in income tax?
If claimed in the next year, then it will get disallowed as tax credits.
So if I claimed in the next year, definitely it will be a prior period item and it will. But I am not claiming. The situation is I am not claiming it in the books of account and still it is getting reflected in my GST. So what is the problem? The income tax department will come up, this is an unexpected expenditure. So we cannot sit relaxed that okay, I have not claimed, I am happy. Still you have to get it rectified, if possible. Because income tax department may come up with a situation that this is the material you have purchased, but you have not paid through your regular books of account and it is an unexplained expenditure. Okay, so that aspect you have to remember whenever reconciliations are happening. Just do not blankly ignore the invoices which are not appearing in 2B and not appearing in your books of account. Okay, got the idea? At present, income tax department is not so keen on these issues, but in next year definitely, because now they are pushing lot of GST data and trying to reconcile it. Okay, got the idea? And the second thing is in terms of invoices which are pertains to 31st March but booked in subsequent year. In that cases also income tax may come up with the prior period aspect. Okay, they are not concerned with GST credit because GST credit cannot be prior period. That credit is allowed anytime. I can claim credit up for March 31st in subsequent year. That is not a problem. But income tax may come up that the basic expenses is prior period. Okay. So GST you are getting saved sometime, but income tax you will get it problem. That's why this cutoff procedure is very important. You got the entire scenario. Why 31st March cutoff thing is very important in terms of GST also and in terms of income tax, because both the department are going to talk with each other in a real time basis. Now days are gone. We cannot sit कि GST में हो गया बात करें. That are gone. Okay. So anything and everything whatever you are doing in GST, always remember what is the income tax angle to that entry. Then only you do the rectification or whatever correction is required. Okay. Then purchases relating to fixed asset need to be identified and GST treatment for purchase fixed asset purchase need to be confirmed. HSN code of fixed asset purchases need to be checked in GST. So now all of us are aware the GST is moving towards the HSN code. I have kept a separate slide for HSN code only. So this is also an important thing in terms of 2B. Whatever HSN codes are relating to fixed asset, that is the capital asset, you need to identify that invoices and check whether it is a fixed asset transaction or your normal expenses transaction. So if you are a dealer in furniture, definitely for you it will be the purchases. But for other people, that furniture HSN code will be in terms of fixed asset. Okay. And again, income tax angle will come in. Days are not, means in subsequent, what I see is in next 2 years, department will come up with a fixed asset addition list from GST. Okay. They will say these are the HSN code relating to capital asset, whether your fixed asset addition matches with that capital asset on. So in next 2 years, this things will start. So we should be aware of that, how to proceed. Okay. Up till now, it's okay. Speed.
Yes.
I can share it. PPT is not an issue.
So just want to inform everyone that all the presentations just shared by the speaker is available on WRC website
Okay.
under the resources tab.
Now, mirror to the purchases is the sales. Okay. Sales data is very important for accounting as all profitability and other ratio consider sales data as the base for calculation. So again, so whatever verifications or whatever analytical things department is doing, that is based on our sales figure. All the ratios, all the analytical part are there on the sales basis only. All sales invoice needs to be checked and cross-confirmed with GSTR1 data field in the GSTR. Now this is the self-verification. This is a self-verification in terms of one. Now there must be reconciliation needs to be done as per following: GSTR1 with 3B, 1 with books, 3B with books. Now sometimes we have come across that data with relates to 3B and GSTR1 also is differing. So we need to ensure that 1 and 3B should always match on a monthly basis. Sometimes we have come across during the audit that 1 and 3B is also not matching. Now that type of scenario should never happen. 1 and 3B should always match. Okay. Now GST department, just as I told you, that there are a lot of exchange of data happening between GSTN department, GST and the income tax. Now all of you are aware what is a GSTN network? Yes, so GSTN is the database that is the GST department is using. It's a central database they have created, that is the GSTN. Now similarly, income tax has created its own database, that is the ITBA. Okay, both has its own database structure. But over the time, this database structure are moving towards centralizing. That is what they are planning is they will have a central server. Okay, so both the department will have a common database to fetch the records. Now everything is moving towards the PAN. So PAN will be the single most identifiable number for all the dealers. So in 2 to 5 years, I think so, this two network will merge in terms of database. In terms of administrative, they will be different, but in terms of database, they will merge. So you will get a single data source. You have to report to a single data source. Okay. At present, we are reporting to two data sources. We are reporting to GSTN and we are reporting to income tax separately. Okay. Both are pushing data separately. Okay. So when they will get merged, only single data pushing will be happen. It's a virtual world. It will become a virtual world. 26 AS and GST data will be same. There will not be two separate data. Okay. At present, you get GST information in 26 AIS. Okay. So that they will merge. Then it will be a single source. You have to report to a single source. Now, when this will happen, what will be our issue? Data has to be real time. Okay. Now we cannot set the 31st March ho jane to फिर we will start closing the books of account. Monthly closing, quarterly closing, whatever listed companies are doing, MSME has to do. Okay. Also, that should be done either of the data before March ending to our final. Now, second issue in this is, suppose I have not reflected sales and my buyer has reflected purchases. Okay. So, same mirror will happen when whatever I told you in purchases, same mirror thing can happen in sales also. If someone else is reporting and I have not reported. At present, department is not asking me कि he has reported, you have not reported, you reconcile. That reconciliation is happening only at the time of scrutiny. Okay, or audit, when department audit comes up. But later on it can become online. If someone is claiming the credit and I have not reflected, immediately query can come. Okay. Anything, any issues you feel that sales side you are getting the issue and you are not able to understand or decide what to do?
Yes, sir. Just now you mentioned that someone else has recorded the purchase.
Yeah.
We have not recorded the sale. How he can claim that ITC?
He cannot claim the ITC.
So how-
Administratively he cannot claim. Legally he can claim.
But how will he be reporting and where he will be reporting something and on what basis?
So he has to, he will file in his return the claim. He can always file. Only this department will say that is a mismatch. There is no stoppage in my claiming the amount. Okay, department is not stopping me from claiming. It is saying just there is a mismatch. You have to explain the mismatch. Okay, so legally there is no bar in claiming. It is not that if other party has not put in and I cannot claim only. At present they are administratively blocking me the credit to that extent. They are not saying you cannot claim itself. It's a credit block. Okay, in this system.
Thank you.
Yeah.
Seller.
Hmm.
How do I get to know that the purchaser has taken credit in his books?
So in his 1A, see 1 and 1A are mirror, 2 and 2B are mirror. Okay, so whenever there is A, it is report from the GST network. Okay, so A is for that. So that's what I am saying, there will be a pushing of data and you are pushing it back. This is a two-way communication. Earlier it was only one-way communication. We were pushing. They were not pushing anything to us. Okay.
Is this GST or money?
Yeah. 1A is always available.
So there is GSTR 1, 3B, 1A rules.
Yeah. So 3B is a stopgap arrangement. It's a stopgap arrangement. It can't be a permanent arrangement. Because there was no concept like 3B earlier. When GST was introduced, 3B was never formalized. Then they felt that something is required in between. Because system has not coped up with 1 and 2. So they introduced 3. 3 was never there. Means when GST was there in 2017, there was nothing like 3. I used to take a lot of lectures in terms of tally for GST. So we were never told that 3 will be there. We were always told 1 and 2, 1 and 2. Okay? Yeah.
Nowadays, in AIS, they show the GST turnover and GST
Yeah.
per purchase.
Yeah.
But that never get tallied with the actual GST per turnover.
Yeah.
So, will that create any issue or?
Definitely it will create issue. Not at present because it is on very initial stage. Very initial stage. Because just, I think so, they are running the pilot program. They are trying to see what are the mistakes, what are the comments we are pushing. Now, in a day-to-day level, we are not able to actually reconcile and push a comment. But definitely 1 or 2 years down the line, they will try to find out what are the mistakes happening, what are the reconciliation issue, and they will try to reduce that gap. So if suppose today gap is of 20% or 30%, they will try to reduce it to 5% and then ask a specific question. Okay, this happened with 26 years also. Initially, if you say 10 years, 26 years, there were a lot of gaps. It was not matching, never matching. Now we are billing it like anything. It's a Bible. Means 50% of my return last year was based on AIS only. So that belief has been created by the system. Okay, and we are started. So when we start reconciliation and we also do research, we also do some study, and we also try to fill in the gaps. Okay, we are trying to reduce that gap. Earlier there was a lot of gap. So same thing happened with that. And when both the department will merge, the data will merge, AIS will never report GST. Okay, imagine a scenario, GST and network and ITB are getting merged. The reconciliation issue will be zero. Okay. Then next comes the expenses part. So up till now I was only dealt with the direct sales and purchases. Now the expenses part. Expenses part also has become very crucial in terms of GST because now credit is fully available apart from expenses which are blocked under the block credit. All other expenses you can claim the credits. There is no bar in claiming the credits on the expenses part in terms of business expenses. Okay. How many of you are claiming expenses, GST on expenses, credit part, on bank charges? 1, 2 only. Why? 3, 4. Means any specific reason not claiming GST credit on bank charges? But why credit is not claimed? Because income tax you only get 25% or 35% benefit. Claiming a credit you will get 100% benefit. GST amount are?
Material. So maybe not directly related to service or sales.
No, but bank charges is, I think so, it is a pure business expenses. And there is no bar, even if it is 100 rupees, it's 100 rupees. Okay. So I think so we should all claim bank charges, all claim all GST credits on expenses. Because whatever, don't treat that this is an very minor amount, why should I waste my time? It's a amount, it's 100% amount. Expenses only 25% you will get. Okay. So, like purchase, cross confirm all the expenses which are booked. RCM applicability on expenses. That is, you need to determine wherever the vendors have not raised any GST invoices, you need to isolate all that invoices and check whether RCM is applicable or not. Because almost now everywhere when GST bills are not there, they have covered it in under RCM. Okay, either it is on the forward charge or on the reverse charge. So what government is saying, all invoices, there should be some GST impact. Okay, unless and until it's on the, yeah.
One problem that I face is when we are following cash system of accounting.
Yeah.
In that case, claiming expenses and trying to match it. There are credit card statements, their expenses have gone through that. Then, and if there is cash system of accounting, then at the year end to be matching that, whether the expense has been paid, not paid, that becomes very complicated.
So complexity, you need to upgrade your system. I cannot avoid the complexity, but due to complexity, I'm not claiming is a. I think so. It's something which is not happening.
Whatever expense is not paid, then we don't claim.
So in cash system, you are not booking the expenses, but there is no bar on GST to claim.
So we can claim that.
Yeah, GST you can claim. GST you can. They can always say cash to mercantile is always allowed. Either or, mercantile to cash, cash to mercantile, there is no problem. See, accounting system doesn't determine. See, again, you have to remember, accounting system doesn't determine whether credit is available or not. These are two independent things. Okay? But whatever credit you are taking, that credit aspect has to be booked in the books of account. Sometimes in the cash system, it may happen you take the credit and you book the expense in the subsequent year. That is not a problem. Okay? That is not a problem.
For the RCM applicability on expenses, there is a requirement to generate self-invoice.
Yeah.
So we are generating we are giving numbering and we are reporting in the GST 3B. That is the enough compliance. Right?
Enough compliance. Enough.
You have to report from to numbering.
Yeah. So that is because they want to formalize that system. They want to keep the track. Now that track can be for two parts. One, whatever GST you are paying under RCM, that dealer is also getting tracked. Because see, there is no intent of government to collect all the tax under RCM. They want to charge the dealer under forward charge. RCM is again a stopgap management. So by tracking your RCM, they can go to the dealer that why you are under RCM. You are under forward charge. Okay, depending upon the criteria, they can go because you are reporting it in under RCM. Self. No, just the dealer name is there now under what for whom RCM has been paid, that you are reporting. Yeah, so your RCM figure will get report. No, GST number nahi. But party name they can ask you. You have the party name.
Once they ask, then they will.
Obviously. Yeah. No,
In theory, we are showing.
I am not reporting the party name at present, but you have the data to ask. Na? What I am saying is you are creating a data. Now how to formalize it is a different aspect. Okay. You are creating a data of RCM. All the dealers who are paying under RCM for security. Because HSN code you are reporting. What RCM you have paid, under which HSN code you have paid, that is getting reported. So that data has been created. You understand, department is creating a systematic data. It is not one. Okay. Then again same thing, all expenses which are more than 10,000, income tax you have to ask, income tax aspect you have to remember. All expenses needs to be reconciled with GST in reconciliation following. So same like purchases, on the expense side also situation may arise. Okay, someone has reported the expense and the GST and you have not claimed the credits or you have not booked the invoices. That you need to verify and book all the expenses. Okay, again same thing, unexplained. If you are not booked the expenses, unexplained thing may come up. Okay, sometimes what is happening in case of proprietary and partnership firm, the partners are giving GST number of the firm and paying from that just like credit card. Okay, so what is happening if that from credit card statement that expenses is not booked under the expenses and GST gets reflected, there may be issue, cross issue. Either way, if you are booked, there may be issue of personal expenses. Okay, and if you have not taken the credit, there may be issue of unexplained. Got the idea? Okay.
What is to be done in that case? Are they shown as drawings of partners?
So that is your decision whether you want to treat this as a personal expenses or not. If you are treating it as a personal expenses, definitely it will go to the capital.
Every time when person goes, he says my firm has GST number and he claims his expenses on that.
Yeah.
Transportation expenses, or maybe travel expenses, but they are disallowed.
No, disallowance is again a different aspect because for disallowance, justification of business is always there. So suppose if I am a partner in the firm, just like we are chartered accountant firm, and if I am traveling for a business, definitely that credit is available to me. There is no bar on taking that credit. Just being a traveling expenses, there is no bar. It's a business expense for me. Okay? And personally I am claiming the credit. In my firm, I claim all the credits for traveling. There is no issue. Because in the service industry, traveling is one of the major expenses. Okay, traveling is one of the major expenses. Hotels is one of the major expenses. There is no issue in losing on that credits. Okay, and if you want to be most ethical, you may say percentage that 20% is personal or 30% is personal. You can segregate, but there is no bar in taking credit. I don't see anything. There is block. This you cannot claim. You can claim. It's just the business. Your justification of business expenses. Okay.
It is used for business as well as personal.
Yeah.
So historically, what is the maximum that income tax is penalized?
So there is no formula as such decided. Formula is not, it depends business to business. So normally earlier we used to take 30% as a benchmark, 20 to 30% as a benchmark for personal. Depends. There is no rule given as such. Over the year people have derived their own rule. Depending upon your experience with income tax, depending upon scrutiny, whether scrutiny has happened or not. If there are no scrutiny happening, then you can pay 100% also. Okay. So nowadays scrutinies are not happening to that extent. So people are getting off. Okay.
So, if we make payments to personal credit card, means partner's personal credit card, we should just have proper documentation.
Yeah.
It is allowed to be
Yeah.
only
Sure.
proper
Yeah.
documentation.
So there is no bar. There is nowhere written that payment has to be done through bank account only. Nothing. It's only the criteria payment has to be done. Okay. No one has stated that payment has to be done in this fashion only, or this way only. If partners is doing, we in our firm also we do through our own credit cards and we book that expenses in the firm. There is no problem. Then next comes the other income. So I have of the P&L side, I have debit purchases, expenses. On the credit side, sales, and on the last credit side is the other income. So apart from sales, needs to check for income from other sources, capital gain, dividend, interest income. Today is the last day for the advance tax. Hope everyone has paid or they are in the process of paying. So department is rigorously pushing this data that pay advance tax, and day and night we are getting this. So when department gets that email, that day is the most tedious day for us. Every now and then client will forward that email to us and say what to be done, nothing to be done. Keep. So Insight has created a new insight to us. Okay, Insight portal has created a very good insight to us. We are now coming across a lot of transactions where we never imagined that client is doing that type of transaction. Okay, Insight is one of the, I think so, the greatest achievement of the department. They are pushing the transactions like anything. They are searching the transactions like anything. This PAN is picked up from everywhere. You will, I am not, I always try to find out what new is there in the Insight, what additions they have done, what new information they have pushed in. Okay. So we have all of you last week, I think so, all the clients have got this Insight notice that check the Insight portal, see whether you have done this transaction or not, see whether you have paid advance tax or not. And the wonderful part of the Insight portal, it is not going by the income criteria, it is going by the gross income criteria. Gross sale consideration is equal to income. Means in terms of property transaction, they are saying gross sales is equal to this much, why you are not paid income tax. But whether I have earned profit or not is the important thing. Okay. So that is again a task that we have to do. Whatever there is appearing in the AIS or Insight portal, you have to cross verify it and book it in your books of account. Okay. Fortunately, in terms of income, there is no prior period. In terms of expenses, there is a prior period. Income, there is no prior period. Okay. So even if you forgot and booked in the next year, it just be the matter of taxation that is will be happening. Okay. So this is the portal. All of you know the Insight portal. Now, in terms of capital gain, just to add, just to give you the aspect that you can have a legitimate tax planning in the capital gain part. Suppose your client or you have earned some capital gain and you have some loss making shares in your portfolio. You can sell it before 31st March, book the loss and set off it against the income. And you can repurchase it. So there is no bar in selling and repurchasing the same shares. So that you can do before 31st March if you have earned some significant capital gain. Okay. Vice versa is also there.
So this 23rd July cutoff date, the loss which is happening, the
Yeah.
gain made before that and the gain made after that, the loss set off. Can you throw some light on this?
So 20th, I was wondering why that 23rd July date itself came on the calendar. Because that date has created lot of havoc in terms of calculation part. So I can give you a unique example that one of my client was holding the property in private limited company, and that property was eventually to be sold. So instead of selling the property, he sold the shares of private limited company. So the company got transferred. Now, if that property would have been sold in the individual name, then I used to get the indexation benefit. After that, in 23rd or before 23rd, it will never matter for residential. But since I have sold the shares of that private limited company, suddenly the scenario changed, because for shares, indexation benefit is not available after 23rd. So if you are selling the shares after 23rd, even long term is there is no indexation. Unlisted, there is no indexation. And tax rate is 12.5. Imagine company has purchased property 20 years before this date, and you get the cost at the face value of the shares. The property value has increased like anything. 11 UA property shares has to be valued at market value of the property. So the value of that shares has increased like anything, and what cost I am getting is at the face value. The capital gain liability is phenomenal. So 23rd July has created that problem.
Listed shares. If you made capital gain before 23rd July,
Yeah.
if you have a loss after 23rd July, the set off can happen?
Yes, set off.
So it doesn't, the set off can happen irrespective of the rate that is applicable to
Set off there is no. Once the things is taxable, set off is no. Tax rate has only changed. For set off provisions, there is no change. Set off will happen in a normal. Okay. So in terms of capital gain, you have to remember, if you want to do any set of things before 31st March, you have time cap is very less. And it is a legitimate, so even there was a ruling that it is a legitimate tax planning. There is no issue in this type of tax planning. If there is a sale, same thing. Okay. So any type of capital gain which is there during the year, and if you have a loss on shares or what, you can book the loss, you can set it off. Okay. But that you have to do before 31st March. Then comes the stock part. This is the normal audit procedures that we are doing for every companies. That is the physical stock verification as on 31st March. Physical stock and system stock should be cross-confirmed. There may be difference in due to, so that reconciliation process has to happen. Okay. Also, so this is what I was telling about the HSN code. Now each stock item you have to identify it with the respective HSN codes. Now the phase 3 HSN code has been launched. So we are now into phase 3 of HSN codes. So each item has its own unique HSN codes defined. So whenever you are taking physical stock as on 31st March, try to bifurcate based on HSN codes of that particular item. Okay. Now what will happen in case of a difference between physical stock and book stock? What is the normal process? What we do?
Just take to the physical.
So as per the audit procedure, we have to adjust the book stock with the physical stock. Now what will happen to the GST credit? Suppose there is a difference and there is some shortage in terms of physical stock. What will happen to the GST credit? GST credit has to reverse. So normally it has to be reversed, but not in every case, because if it is a natural loss of the stock, then there is no requirement of reverse. Okay. So if there is an evaporation or there is a natural loss, so over the time due to the holding of the stock, if there is a reduction in the quantity of stock, then I don't think so there should be a reverse, because it is a natural process. Okay. So not every case you have to reverse, you have to understand the characteristic of that particular stock item and then decide whether you want to reverse the GST credit or not. Okay, it's an individual decision, so you have to take based on your understanding. So just to explain you briefly, why I am explaining you HSN code, because this is again a futuristic thing which will have very important in our day-to-day accounting as well as compliance issues. So as you are aware, HSN codes are the unique codes given to the each of the items. Okay, unique code given to the each of the item. Now normally HSN code consists of 6 digit. So what will happen is the first 2 digit, if you see, it is always the main broad item. So every HSN code, first 2 digit will be the broad item of that particular stock characteristic. So if suppose it is a t-shirt or that, then the first 2 item will be with regards to the cloth. Okay, the broad item. Then next 2 digit will be the subcategory and the last 2 digit will be the specific item. Okay. So 6 digit divided 2 for the broad item, 2 for the subcategory and the 2 for the specific item. Now each code will be unique code and identifiable code. So when I say I am writing 2 digit HSN code, what will happen? When all my items are specified as per 2 digit, then I will not know what is the sub characteristic of the stock. Okay. If electronic item is one code, I will not know within electronic items whether I have TV or whether I have washing machine or whether I have fridge. But when I go to the sub code, I will exactly know whether I have TV, whether I have washing machine or whether I have fridge. Now what will be difference when I will go to the 6 digit HSN code? So at present, see, as per the GST and circulars, we are at phase 3, okay, where 6 digit HSN code is compulsory for all businesses having 5 crores, more than 5 crores annual turnover. So all businesses, now 2 things will happen. Days are gone where we are saying that inventory is not maintained, because once you have HSN code compulsory, 6 digit HSN code, you cannot say I am not maintaining inventory. Okay, because you have to identify each and every item with an HSN code. My invoices will be based on that HSN code. So automatically I have to maintain the inventory. I cannot say I am not maintaining it. Second thing, what will happen? Due to 6 digit HSN code, see, dealers who are doing cross adjustments, that will stop. Now if I have purchased TV, I have to issue bill for TV only, and that item to item will match. Okay, because all my purchases will be of 6 digit HSN code, all my sales will be 6 digit, so matching will be automatic. Got the idea? So whoever are doing audit for manufacturing, most of they are maintaining inventory. For traders, there is a difficulty in maintaining inventory. But if he is with that 6 digit HSN code criteria, inventory has to be maintained. Inventory has to be identified with a particular HSN code. And henceforth you have to keep track HSN code wise, whether the sales which are happening, corresponding purchase have happened or not. There cannot be negative stock in HSN code. Okay, you understood? You got the broader idea? Up till now, chal raha tha. Everyone was doing. Okay, traders, everyone was doing. But now it has to be specific. You can't ignore that aspect. This phase 3 has just been launched. It is very recent phenomena. So a lot of people are not aware the implication of phase 3, but it will have a greater impact on the business. Okay. Once that system gets normalized or when they start analyzing based on HSN code. 2 years from now, department can come to your doorstep and say you have purchased 10,000 TVs for the year. Show me where you have sold. That is going to happen. Okay. They can pinpoint your inventory. That this is the likely inventory you are holding. And if the system works as per their wish, they can give you exact inventory figures. Then do physical verification, say whether it is available or not. Okay. If system works as per their wish, they will give you inventory figures. They will say that this is your stock valuation. Okay. Now match it. And that will have repercussion in income tax also. Because once your GST stock is this much, your income tax stock has to be this much. Okay. So whatever adjustments of stock is happening over the year, you have 2 years to reduce it. Try to reduce it as much as possible. Match it with your actual stock. Those are. I know a lot of back-end work is happening. I interact with department many times. So I know where they are going and where they will reach. That's why I am saying 2 years. You have a time limit. Adjust all your stocks. If there is no, if it's not adjusted. Okay. So this all leads to my mind one thing, that time has come that we should do some reset button. Okay, things over the last 10 years, 15 years have changed so much and new things have come in such a way that time has come, we need to understand our database with a new mind. Okay, so what I called it is a reset button. You have to scan your trial balance in entirety. Each and every item of the trial balance you scan, whether grouping is happened properly or not, whether subgroups are created proper or not. Okay, and do a reset button. Means don't keep over the time we will do. Time has come. 1-2 years you have to do a comprehensive rebuilding of your accounting data. Either you split, create a new trial balance, whatever you want to do. But time has come to have a reset button in your accounting business. Okay. So, because see what is happening up till now, when I am filing income tax return, there are a lot of grouping happening. Okay. Up till now, I am not bothered much about the group. What I am bothered whether all the figures have gone. So what was the most common thing we were doing? Others. That is the most common thing. कुछ नहीं समझा तो others में डाल के रख दो. That was the simple mindset. All of us. See, we are all same. Others में डाल के रख दो. But now that others figure has to reduce. You cannot go on pulling that others figures to an unimaginable amount. And department is also pushing. They are pushing others has to reduce. You cannot say I have clubbed all the expenses in others and reported it. No. You have to report it properly. Traveling है तो traveling properly report कर. Because they want to compare. Why you are incurring so much of traveling? Okay. So that's why reset button is needed. That's why regroupings are needed. You have to align it with what is to be reported. Whether correct ledgers are reported or not. In terms of balance sheet item also. See, I have come across number of scrutinies where they have gone to the balance sheet item in your return. In loans and advances, you have reported so much, but your balance sheet is not showing so much of loans and advances. What other item you have clubbed in loans? Just an example. So even balance sheet item needs to be regrouped properly. You cannot just say loans and advances, other advances. other assets, other current assets, other fixed asset. That other word has to reduce. And I think so maybe 5 years down the line they will delete that other column also. Why you want another word? Okay. Got the idea? So if your HSN code is of fixed furniture, you have to addition in furniture. You cannot say other assets. That has to match. That triangle has to be complete. Okay. Now that will have implication on depreciation also. Because now they can exactly know which HSN code has what depreciation rate. No need to worry. HSN code depreciation rates are available. Okay. So if you try to analyze last 5 years return now, the department is trying to find out way of reducing the differences. Earlier we used to do depreciation, there is a difference. My calculation is this. Now they will say HSN code this much, your depreciation is this much, you have claimed this much, what is the difference? Okay. So these things are bound to happen. So reset button, what I feel, we all need a reset button, both in terms of our mind also and accounting also. Then GST reversal of expenses and purchases. So this is all regard to GST reversals. Now all of us know if the payment is not done within 180 days, I have to reverse the GST. Okay, whatever credit is claimed, you have to reverse it. You can claim the credit as and when the payment is made. So it is not permanently blocked. It is deferred. Okay. Now counter of 180 rule is again MSME. You have to remember if you are reversing any GST due to 180 days payment rule, you have to remember MSME disallowance. Okay, because here you are yourself are saying that you have not paid, so you are reversing. Then there you cannot say that I don't know that payment, whether payment is made or not. Okay, so counter rule is always there. You have to remember whatever you are showing in GST, counter it with in the income tax. Otherwise, there are penalty issues. Okay, because now you cannot say that I don't know whether payment is made or not. I don't know the client is. You yourself are saying GST rate. Okay, so penalty issues will be there. Same thing for personal expenses. Whenever you are reversing GST due to personal expenses, you have to reverse it in income tax also. Don't claim that particular expenses in income tax. Okay, do remember. Now that's why I am harping on all credits to be claim of expenses. Because I believe that sometime department will come up that since you are not claiming the credit, legitimate business credits, these are personal expenses you feel. Okay. So when I am not claiming a particular GST credit, I have to say why I am not claiming. Just if materiality के वजह से नहीं claim किया ऐसा तो बहुत difficult. Due to materiality aspect. So department may come up with the explanation since it is a personal expenses you have not claimed. Okay. So for my interest, I should claim all the credits and then reverse it wherever required based on the particular criteria. Okay. Now these are all reversals which are compulsory reversals in terms of GST, foods and beverages, motor vehicle except goods vehicle, construction, goods loss, personal expenses, then ITC claim twice, wrong tax type claim, sales return, misclassifieds, common ITC reversals. Now what is common ITC reversals for exempted turnover? Any example? Professional fees. Exempt income and taxable. So exempt turnover and taxable turnover. So if you have both the turnover in your books, the common ITC will be pro rata. Okay. So what are the other examples?
Agriculture
Hmm?
business. Agriculture business.
Agriculture business,
Goods transport.
goods transport. Okay. The other thing is that the hotels which are under forward charge who are serving liquor. Okay, do remember this. This is very important thing. Lot of people are not reversing the GST, where hotels are under forward. Restaurants are normally not under forward charge. They are under the non-ITC 5% charge. But hotels which are under forward charge and running the restaurants. Okay, there if they are serving liquor, then common ITC has to be based on the liquor turnover and non-liquor. Okay, because liquor is outside the GST. Got this thing? So those who are having clients of hotels which are under forward charge, do remember this. And department has now actively started finding out. So last 2 years we are facing a lot of scrutiny on hotels, where the hotels are serving liquor and they are not reversing the common ITC. Okay. You can have other examples, but these are the exempted turnover, not the turnover where ITC cannot be claimed. So again, that will be a different thing. So if your turnover is there, if suppose your entity is running a restaurant also, where ITC cannot be claimed, and other business also, where you are under forward charge, in that case also you have to remember common ITC has to be pro rata. Okay. There are instances where you have a restaurant business and you have other business in the same entity. Okay, restaurant is covered under 5% non-ITC. In case of real estate companies, where they are having a residential project and commercial projects. Commercial projects are under forward, regular charge. Residential are under non-ITC, 5%, 7.5%. Okay. So in that case also common ITC has to be bifurcated. Got the idea? So these three types of industry where there is a major issue, because normally people don't remember to either they don't claim it in entirety, that is also wrong, or they don't reverse it. Okay. So in case of real estate companies, do remember where they have commercial as well as residential project. Common ITC has to be based on pro rata. ITC on sale of capital goods and fixed asset, that is a classic thing. Now why I have to do this before 31st of March? Whether I can do subsequent to 31st of March? Yeah, I can do it subsequent to 31st of March. There is no up to September, there is a time limit given. Okay. So there is no problem in such. But why we should avoid it? Because if department comes before I doing it, there may be issue of penalties. Okay. This is just to avoid penalties. When I am doing it from my side, there is no question of penalty to be levied. When department is saying and I am doing it, then there will be a situation where penalty may arise. Okay. Now whether this ITC which are reverses can be claimed as expenses? Yes, it can be claimed as expenses. There is no bar in claiming it as expenses. Okay, it's just the reversal for GST. But again, personal expenses, not allowed. Depreciation, we have already discussed as per income tax, as per Companies Act. Now again, HSN code will come into effect. Okay. Now whether fixed asset verification is mandatory for GST? No, there is no mandatory provisions. It's for our audit requirement or for our reporting requirement. GST doesn't ask for any physical verification for fixed assets. So up till now we have, I think so we have covered comprehensively with regards to book closure and financial statement. Anything you feel that I have left out or Any instances? I try to cover as much possible ground as
Year-end cash.
year-end cash verification. So that will be the part of the audit procedure again. That is a part of the audit procedure, cash verification. Thank you, sir. So that will be prepaid and in advance. Okay. So all prepaid expenses you need to bifurcate. Any issues? Suppose you are booking prepaid expenses, whether it will GST credit issue will be there on prepaid expenses? No, there will be no issue because GST is not depending upon the year in which you are booking the expenses. It is only a question whether you have booked the expenses or not. Okay. So it will not depend upon year in which you are booking the expenses. There is no problem. You can claim GST in entirety. There is no question of claiming GST on a proportionate basis also. Okay, there is no need. You can claim GST on entirety. Then just few ROC compliances that you need to remember. Just again same thing, you have to check the master data. Nowadays master data is very critical in terms of ROC. Check all whether master data is properly updated or not and whether it is matching with your books of accounts. Director's name. In the most critical part is the index of charge. Okay, that is the most critical part. Nowadays lot of notices from ROCs are coming. And even in the new companies act, beyond 180 days, you cannot create the charge itself. Okay, beyond 180 days, you cannot create the charge. Do remember earlier that limit was not there. So even if I have forgot to create the charge, I could have created the charge anytime. But now, beyond 180 days, you cannot create the charge. Okay, so do remember your index of charge matches with your balance sheet charge. If any charges are left not created, do get it created. Okay. Then shareholding patterns, again same thing, whether it matches with your books of account or not. Now these issues are typically for unlisted companies, unlisted privately closely held companies. Sometimes banks also give unsecured loans, the typical structured loans, and they forgot to create charge. The NBFCs, okay, the NBFCs, they are not so keen on creating charges, but as a responsibility, director has to get charge created. Okay, it's a responsibility casted on the director. See, again, do remember. See, even if I am not bothered to create the charge, the owners of creating charge is casted on the directors. So if NBFC doesn't pursue me that whether charge is created or not, still it is my responsibility to get it done. Okay, I cannot escape that since they have not asked, I have not created. Do remember. So index of charge is very critical. ROCs have started coming up with the notices where they have found that charge has not been created by the companies. Okay, they are penalizing directors for non-creations of charge. Then auditor's appointment, again very critical. ADT 1 has to file. Then next is the CSR applicability. The companies where CSR is applicable, you need to remember 31st March is the deadline for CSR expenses. Whatever your CSR liability of last year was there has to be spent and certified before 31st of March. Okay. Company secretary has to mandatorily give the certification that CSR has been complied with. It is not only spent, if you are giving it to any trust or that, you have to take the utilization certificates. Okay, you have to take the certificates from that respective trust. If you are doing your own spending, you have to create for record of spending and get it certified from your company secretary. CSR is very mandatory from up to 31st March. All companies have to spend. Otherwise, you need to deposit it in PM Care account. Okay, post 31st March, if you have not spent, that amount needs to be deposited to PM care account. You cannot say I will spend it in next year. Do remember this 31st March, very critical deadline for CSR. Then share capital changes, all whether that has been effected or not, any transfers which are happening. Now, most common mistake what we do in case of transfer of shares, we don't, sometimes bank entries are not done, just transfers are happening in case of unlisted shares, family transfers. Okay, do remember bank entries has to be done because it has to be a regular transfer. And in case of 11 UA applicability, check whether valuation has been done or not. Okay, within family, even if valuation is not done, you have to get it value, treat it as gift, whatever you want to. Okay, so do remember in case of an unlisted transfer of shares, you need to determine whether you are transferring it as a gift or whether you are selling the shares. If you are transferring as a gift, then don't do any bank entries. But if you are doing the bank entries, then do valuation. Okay? Because it will be a mandatory thing. And if there is any capital gain liability, you have to pay the capital. Okay? Even if it is within the family transfer. Still it is a transfer if it is done through bank entries. If it is a gift, then I can understand. Gift also exempted part is only relative, non-relative gifts are taxable. So there also valuation will be triggered. Okay? And 11 UA formula has been comprehensively redefined and now every aspect of 11 UA has been clarified by the department how to do a valuation. So balance sheet item has to be taken, market value has to be taken and 11 UA valuation has to be done. Okay? Now demat of shares, again one more mandatory provisions which are coming up, that demat of shares has to happen. So time limit has been extended, 30th June. So it's only 3 months. I don't know how so many of unlisted companies still demats are pending, but we need to do it. They may extend it further, but eventually we need to do the demat of all unlisted shares. Now, whether foreign subsidiaries are covered within the demat provisions? Yes, holding subsidiaries are covered. So, if you have a holding subsidiary relationship, if holding company is within that demat criteria, subsidiary company will again automatically come in the demat criteria. Okay, even though it is not crossing the limits. Do remember, if your holding company is in demat, your subsidiary has to be in demat. And for foreign subsidiary, it is a compulsory demat, even though holding companies are not in demat. Okay? Then our favorite provisions of MSME. Last year, we all went through the nightmare. We all created our own explanation for not performing MSME or performing MSME. But this year again we are on the brink of 31st March and again same thing is happening that we don't know who are MSME, whether the payment is made or not. But I think so relaxation is over. This year some strictness will be there. You have to be ready for the queries, whether MSME payments are done within the time limit or not. Time limits are given. If it is not within that time limit, expenses will be allowed on payment basis. Okay, expenses will be allowed on payment basis. Whenever you are making the payment, your expenses will be allowed. It is not the disallowance of expenses, it is merely the timing issues. Okay. 31st March is again a cutoff for all the expenses above 45 days criteria. So suppose you have booked the expenses in month of September and still not paid. Okay, that has to pay with it before 31st March. Otherwise, it will get automatically disallowed. Got this thing?
Is applicable only for service provider?
MSME is for everyone. Interest provision is mandatory for everyone. It is not. Interest provision is mandatory. So interest provision different. That is under MSME Act. So interest provisions are different. Then the expenses part 43 BH is different. Okay. So Companies Act also specifies that whatever MSME interest you have paid, you have to separately disclose. There is now dedicated portal for MSME payments. Okay. Now, if this is ITRU, so if any of you have not filed the returns, or if any of the clients have still not filed the returns for the previous 22, 23, 23, 24, 25, 31st March is again a last date for ITRU. But in the subsequent budget, I think so this relaxation will further extend it. So now they want to say that if you have not filed the return earlier, or if you have missed to add some income, you can go by ITRU route and file it by paying the mandatory tax and penalties. Okay. So updated return is a chance. They're all undisclosed income that you can disclose. Don't wait for the notices, before that only. Now, how you can take benefit of ITRU? See, the benefit, the most significant benefit what I understand of ITRU is the cases where search and seizure has happened in some other place, and from there some incrementing record has been found with relate to my case. Okay, I am not covered by that search and seizure, but I am aware that some incrementing material has been found. Now ITRU gives you chance. If you want to show that income, you can file an ITRU, show that income, so that if suppose penalty, the 153C notice or the section notice comes up, before that you have already complied. So your penalty is saved. Okay, because if you are covered under search and seizure, ITRU is not applicable. But if some other person is covered and you are not covered but incrementing material has been found, then you can use the ITRU route, other than normal aspect. Okay. You have the idea of incrementing material found at other place. I am getting notice. So normally department what it does, 133(6) notice has been issued. They call for information or summon me, and then they find it whether it is a income chargeable to tax. Then they will issue for notices for reopening. So before that I can file ITR. Okay, so the penalty can be saved. Okay. Invalid cannot be filed, updated return. So ITRU cannot be revised. Once I file the ITRU, I cannot revise the ITRU. For filing nil return or loss return, claiming enhancing the refund amount, my refund cannot increase. Updated in result in lower tax liability. So this is a abnormal situation created where department is saying that you cannot claim the refunds even though you have a refund. It is a special provision. Okay, in the section itself. So even if you have a refund, you cannot claim it because section debars from claiming any refunds. Search proceeding under section 132 has been initiated against you. Okay, so I cannot, if it is against me, I cannot file ITR. But if it is for someone else and I want to file ITRU, I can do it based on incrementing material found at his place. Books, document or assets are seized or called for by income tax authority under section 132A. So this is before the notice is issued to me. Once notice is issued, then I cannot do it. Okay. If there is no adjusted, you cannot file it. So still you can file, you can pay a nominal amount. So they are not saying what amount to be paid. So even if you want to file, suppose you have not disclosed any income, Now, normally I have come across in recently when we were doing some search cases, we found that department has got the information that what all agriculture income, how many SSCs has shown agricultural income. Okay. Now they try to analysis, if suppose I am showing agricultural income of 10 lakhs, whether I have adequate agricultural land or not to generate that 10 lakh rupees of. Okay. So suppose I have half an acre land and I say I am generating 10 lakhs. So they have come up with a unique analysis. How many people are shown income and how many of they have shown land in their asset, agricultural land. Okay. Now they are going further. What is the size of that land? So you now start feeling that just showing agricultural income is not enough. Okay. Whether I have shown the asset or not. Whether I have shown the agricultural asset or not, land in my asset list or not. Okay. So this all thing has to be, now suppose you are not done, then ITRU you can do it while paying nominal 100 rupees, 200 rupees tax, because disclosure has happened if you want to disclose. Okay. Same thing is happening for some of the clients where foreign assets are there. Normally we come across the salaried people earlier working outside India or people working in India but they are getting shares of parent companies. They have not reported that shares in their asset list. This is a typical mistake that is happening. Okay, that you can rectify it through ITR. No problem. RSUs, yeah.
There is something on account of this political donation, some inquiries are coming.
So political takeover is a classic case where they found out that there is only donation going in, where they are expending, that is not reported by the trust. Okay, so genuineness of the political donation was always a question mark. Now there are now counter case laws where some cases it was found out that okay, I have done all the things, I have no control over the political parties, whether I should be penalized for that. So department will now find out midway that you pay the tax, we will not penalize you. It will be a win-win situation for all. Okay. So genuineness is a very critical subject. Who has to prove it is also a critical subject. Whether merely giving a donation my job end or not. Now sometimes classical mistakes has been done. They have paid, they have collected and redeposited in bank. So it's a classic mistake. You are yourself showing circular entries. There you cannot escape with penalties. Okay. So everything, there is a corroborative evidence. Time barring assessment, 31st March, lot of time barring will happen. Now sometimes we have seen that notices are issued online, client has not informed us. So in cases where you feel that this is a client where regular scrutinies are happening and this year no notice is received, just check in the portal before 31st March whether anything is there. Otherwise they will do ex parte. Okay. Then VSV scheme is still on. It's a never ending scheme now. So VSV, those who want to take the benefit of VSVs, do take the benefit. Okay. From penalties. This VSV is failing because search and seizure cases are not covered within this VSVs. So this VSV is failing to that extent. Otherwise it will be a great scheme for all the taxpayers. Okay. Then 43B, all statutory liabilities like GST, PF, just check whether you have paid any disallowance on that part. Filing of Form 15G, 15H for claiming for non-deductions of tax of subsequent years. Then with regards to trust, 10B for donations, otherwise counterparty donation, they will have a problem in claiming the donation for deductions. Okay, if trust has not filed the 10B properly with proper PAN number and all that thing. Then trust where expenses limit is there 85%. You have to ensure whether before 31st of March requisite expenses has been done or not. If you want to carry forward the expenses, requisite provisions with regards to addition in fixed asset or form has to be done. Okay. Because trust is the favorite subject of the central government. They want to eliminate all non-redundant, non-essential trust. All trusts which are miscreant or they feel they are mischievous trust. They just want to close all the trust. They are making compliance issue for trust a nightmare. So we need to gear up for all those who are practicing trust accounting or trust clients. Then lower deduction certificates for subsequent years. You need to file it before 31st March. Portal is open. Apply for lower deductions. Okay. Inside portal is again open. Lot of notices have come. You need to get your verified. To whatever extent you can do verification, you please do the verification so that the chances of scrutiny gets reduced. Okay. To whatever extent you can do verification, you do see up to accept, already disclose, whatever responses needs to be filed at inside portal, please do file the responses. Then again routine task, whatever we are doing it on a regular basis, TDS returns are there or not, GST returns are there or not, opening entries, last year closing, budget versus and in case of real estate companies, do check whether RERA compliance is properly done with regards to 70% account. That is all receipts from customer are properly deposited in 70% account. Okay, collections are deposited and utilization certificate is issued. This year RERA will come hard on all real estate companies. Wherever compliance issues are there, quarterly filings are not done. Okay. And this account has to match now. No utilization without certificate, proper certification. And also remember that where you are taking certificates with regards to utilization and you are following percentage completion method. Now your percentage completion should match more or less with your utilization certificate. Okay? Because utilization certificate show what is the percentage completed. Now if that is showing around 75-80 and in your books of account percentage completion you are saying only 40%, then there will be a query. 5-10% I can understand because there will be some mismatch between engineers and architect and all that thing. Okay, but there cannot be a significant difference. Okay, so do remember all real estate companies who are following percentage completion method, your 31st March utilization certificate percentage matches with your percentage which are showing in income tax. Okay, that too, because department is downloading all RERA certificates. They are matching all sales disclosed under RERA with your returns. Got the point?
So TDS, there's this issue of TDS to be deducted on the partner's interest.
Yeah.
So what is
So it will be for the subsequent year. From subsequent. Yeah. So whenever you are crediting any remuneration or interest to the partner's capital account, you need to deduct TDS. Now normally we do it on a monthly basis withdrawals, but you can show it as a capital withdrawal and on 31st March you can do it. That is only a cash flow plan. If you do it on a monthly basis or yearly basis, whatever. But that has seriously happened because we have come across number of partnership firm where partners in their individual return have not disclosed remuneration and interest. or they have disclosed under presumptive taxation. That is a classic confusion. Whether the remuneration from partnership firm, I can show it as under presumptive 8%, 50% or 8%. That is a classic issue. I feel it should not be there. Remuneration has to be disclosed under 100%. You cannot say that since it is a business income, it is a business receipt, so it can be done under presumptive. I personally feel it is not a valid. But lot of people have shown and lot of people have escaped this scrutiny because department didn't have any mechanism to find out how to cross check it. So lot of returns has been passed as it is. Okay. Now that is why exactly this TDS provision has come in. Otherwise there was no need for TDS. Now with the TDS they can easily check whether remuneration is there or not. Okay. So government is also trying to find out ways and means to curb all these loopholes indirectly. Okay. It is an indirect way of clubbing the loopholes of non-disclosure of remuneration and interest. There was no scrutiny happening. Means I have seen number of partnership returns where partners have not disclosed any income and partnership firm has claimed the expenses. Okay. Surprising for me also, but I have seen it. And there is no scrutiny. So no one is listening. Okay. Now cross references I have already discussed that whatever you do in GST, please do check whether income tax similar things you have done or not. So if any of the GST credit you are reversing on the ground of personal expenses, do not claim such expenses under income tax. Please reverse it. Then payment to vendors. For GST it is 180-day criteria. For MSCB it is 45 days. So just see whether 180 days वाले criteria से आपने अगर any of the MSCB expenses has been disallowed, then GST is to be reversed. If GST is reversed, then check whether MSCB has been taken. Okay, vice versa. Okay, so that ends with my presentation with regards to the financial account, tax compliances, ROC compliances and all that thing. Anything you want, any issues up till now? Hope I was clear, yeah. Set up. Exemption. That is a tax plan. You can do it. This is a legitimate.
Long-term capital.
Yeah, legitimate tax plan. No harm. Whatever, see, these are the means given in the act itself. So whatever benefit you can take it, you can do it. You can obviously take it. No issue. Okay. So this is just the additional slide I want to show you with regards to accounting software. That is, since I am a Tally evangelist, I promote Tally. Just this is nothing to promote Tally, just to show you that whatever compliances you are doing through accounting software, some of the features which are beneficial for you to get it upgraded. That is on a constant visual or constantly you can check that compliances. I am not marketing Tally in any sense, just the disclaimer. There is no marketing of Tally, nothing like that. Just want to show you for your benefit, nothing to do with this aspect of, okay. So why we need a software? Definitely software is required. Manually it is not possible. Manually it is not possible for me to do all this thing. We need some type of accounting software and we should take the help of technology to maximum benefits. Okay. We cannot now say that no, we are not going to use the technology or we are not going to upgrade our technology. Definitely upgradation is required. Technology has to be used for matching with the technology used by the government. So government is rigorously putting technology in its use. We have to match that thing. So just to show you something which I feel that will be very useful in your day-to-day practice. Those who are using Tally accounting software, those who are using other software, similar features can be available. So in Tally, if you see, they have come up with the wonderful feature of save view. So if you see on the top end, there is a go to button. Okay. On the main screen of Tally, there is a go to button. On go to, you have a save view. Now what is this save view? See, any report of Tally, you can save it just like you are saving it in Excel. Okay, and you can name that report whatever name you want to give. Suppose I am saying that I want cash payment about 10,000 as my report. Okay, so I can name that file as cash payment greater than 10,000. Okay, I can filter the report first and then say save view. On the right hand side you have a save view of that report. Okay, on the right hand side you have a button save view. You can save that view. So there is a go to button, there is a save view button. You can save this report and name that report. That report will get saved under save view. Okay, just like this. Okay, and that report can made applicable to all company in your system or this company in your system, whatever option you want. So you have a particular reporting requirement, you prepare that report and you save it. Okay, you can save for that company, you can save for all companies in your system. So if it is a standard report like cash payment more than 10,000, for all my companies in this system, I want that report. Okay, so in one company you can prepare that report, whatever items you want you can keep it, save that view, name that report, say it is for all companies. Okay, so whenever you will go to that report again, it will be an updated report. So on 1st April, if I prepare a particular report, save it, entire for life I can get that report on a real time basis. I need not have to filter it again. Okay, got the idea? So this is the advantage of save view. You can prepare n number of reports, name it and save it. That report will be available by click of button on a real time basis for all the companies. Okay, you can verify it anytime. There is no need to refilter it. Because see, every time refiltering it, you have to remember what you have filtered earlier. Okay, so once you filter it, formalize it, whatever columns you want, you keep it, then just say save, name the report. And this will get updated on a real time basis. Whenever there will be an entry, this report will get updated. Okay, on go to button, you have that report available. Standard reports are always available, balance sheet, P&L on go to button. But this type of customized reports will be also get saved in that particular aspect. Got this thing? How many, any of you are using this save view?
Good.
Yeah.
Some real addition to
Thanks. सर कोई भी रिपोर्ट आप फिल्टर करो, आप फिल्टर अपने हिसाब से करो, कस्टमाइज करो, नेम कर दो, उसको सेव कर दो, हो जाए. एनी टाइप ऑफ इन्वेंटरी, परचेसेस, सेल्स, पेमेंट, एजिंग, ओके, कोई भी रिपोर्ट.
It's possible in client login also and
हाँ.
auditor
लॉगिन. कोई भी रिपोर्ट, बैलेंस शीट इवन आपको अलग से अपना फॉर्मेट करके बैलेंस शीट चाहिए, आप बना दो, उसको सेव कर दो, वो बैलेंस शीट का फॉर्मेट अलग दिखेगा. ओके, वी हैव सम टिपिकल रिक्वायरमेंट, आई वांट दिस एड, आई वांट दिस टू बी शोन सेपरेटली. Create that report, save it under your name. Okay, normal balance sheet will appear normal, whatever standard format. Your format will appear separately, and that will get updated on a real time basis. The beauty part is it will get updated, so no need to do it again and again. 1st April को किया पूरा साल यूज कर सकते. Okay, so again reset button ये सब reset करना पड़ेगा.
So every year we need to do.
नहीं एक ही बार हो गया वो, और it will copy to all the companies also. Beauty part is that report will get copied to all the companies in your system. Yeah.
Suppose customer has not updated his tally license,
नहीं होगा.
तो credit
नहीं होगा.
नहीं होगा मतलब
नहीं, edit log नहीं होगा.
credit log will go away.
Go. License has to be updated.
अच्छा.
वो mandatory requirement. See, system has to be upgraded. Simple. नहीं उसको जूनियर सिस्टम में नया नहीं चलेगा, वो अपग्रेड करना. And they are coming up with new features, so licenses has to be upgraded. Okay. And second report which I feel is most essential for me in audit part, or just cursory look of data. It is not used frequently by most of that is the related size factor. Now this is a standard report which is available in Tally under data verification. There is in the main menu you have a data verification. Here you have a related size factor report. Now what this report shows is every ledger has its unique characteristic. Okay. Now this report will show the divisibility, the multiplier, the highest amount of that voucher in that ledger divided by lowest amount of voucher in that ledger. Suppose advertisement expenses, highest amount is 1 lakh and lowest amount is 1000. So relative size factor will be 1 lakh divided by 1000. Okay. This report will show all the ledger with this relative size factor. Now what is the advantage of this? See, typically all ledgers has its own unique characteristic. If your relative size factor is significantly more, you will come across that there is one voucher which have a significant amount and there is another voucher which has lowest amount. Okay. So what I use this report as a cursory look to find out some abnormality in the ledger. Okay, suppose traveling में by mistake accountant instead of 1000 10,000 डाल दिए. Normally all vouchers are related to 1000 1500, तो उसका relative size factor 1 होगा. But एक voucher 10,000 और दूसरा 1000 का हुआ, तो उसका relative size factor will go to 100. So you will come to know कि some voucher is there, okay, which is showing abnormal. It's a cursory look. You have to just scan it in your mind. As a practicing chartered accountant over the years, I had got this experience that कोई भी ledger देख के uniqueness निकाल सकता. Okay, I know the uniqueness of that ledger. Okay, based on this report, you can find out whether some abnormality is there in the report or not. Okay, not widely used, not widely publicized by company itself, but I feel it very relevant for my audit perspective. Under data verification, main menu में, if you see data verification, okay. If you don't find out, you just message me, I will show you. I just had not brought that scheme. So this is how it functions. Okay, the largest voucher and the lowest voucher. So if you see in this, one voucher is of 30,000 and all other vouchers are of 5,000. Okay, so immediately from this I can find out that there is some abnormality in this ledger. So that ends with my presentation part. Okay, now we can start with the question answer. Before question answer, hope I was able to satisfy or thanks for the patience hearing. Hope it was fruitful or useful in your day-to-day life. Okay, any questions? Yeah. Who is supplier? Yeah. Yeah. Yeah.
But I cannot take it by because they not taking care of the and from income tax perspective, and I want to treat this as my purchases or expense.
Yeah.
So I have to be TDS. So the accounting is kind of but is not to issue the records or refund with us.
So this is a classic problem in case of service sector or job workers, where once they feel that once they issue the invoice they have to pay the GST. Yeah. See, for them GST has a mandatory rule that is within that particular time they have to issue the invoices. Okay. Even though they are not issuing, still okay, we leave aside the GST part. Income tax part, what I do normally in our case, we do a provision. TDS has to be deducted because TDS things are different. But since you have not received the invoices, you can do the provision, book the expenses. Okay, no harm in claiming the expenses. You can say this invoices has not been raised, but service has been availed, so I am providing that in my books of account. And TDS has to be deducted because payment is. Yeah, TDS normally the payment standard नहीं किया रहेगा, but TDS करता है. So you can do provisions. Income tax allow provisions in such cases. Okay. Yeah. Anything else?
An individual who's made some a good deal of profits in shares and stocks. If they say that they've been showing it as capital gains all these years, and if they suddenly want to show it as a business profit, can they switch?
Switch is allowed. Switch is allowed with problem.
Next year, can they again switch? Suppose the next year don't have those kind of problems.
Hope that the income tax doesn't come up for scrutiny. That's it. You can do it. See, it is just because there is no rule written that you cannot switch, re-switch. There is no standard rule written. It is all based on experience and the case law. Where even court has stated that it has to be intended. What is the intent of the SSE? Whether intent was to do business, whether intent was to do investment. Based on it.
Time invested.
Yeah, time invested, intention, what is his other business, whether it is sole business or stock trading or not. So there are all other criteria. But technically switch is allowed. You can do whatever flip-flop you want. But now see what happens when you switch. To remember, earlier when capital asset was converted into stock in trade, there was no problem. Stock in trade to capital asset, there was no problem. But now when stock in trade is converted into capital asset, stock in trade has to be valued at market value and business income has to be paid. So that change has happened in last 2 years. When stock in trade is converted into capital asset. Earlier there was no income tax on that. But now they have come up, when stock in trade is converted into capital asset, stock has to be valued at market value and difference has to be paid as business income. So now that benefit of re-switching is somewhat eliminated. Okay. So वो criteria वो switch करो, there is no problem. But then do remember to pay the tax. Okay. Okay, thanks for the patience, Jerry. Hope I was very clear in my presentation and support. Okay, thank you. Thank you once again.
So good afternoon, one and all. Great, we can say a Saturday morning for all of us. Year-end readiness. We can have a great interactive session, I would like to say, sir. because we are taking in between also questions then and there, whatever topic is going on taxation, on ROC, on accounting, and also on audit also, that what audit part or audit effect will be there. So a great session, sir. We are all thankful for your sparing your valuable time, sharing your knowledge, and coming all the way from Pune in the morning. Thank you so much once again, sir. So is all already informed by the chairman, sir, about the future activities of the WRC. Would like to request everyone to visit frequently WRC website. You are also receiving the mails and SMS communication, but otherwise also you can visit the WRC website and be a part of the WRC also. Like my role already informed by chairman, sir. Some of maybe late joined. So if you want to coordinate the session or contribute any other way as a speaker or author in a publication or a newsletter, you all are very well welcome. Just fill the my role at WRC, which is given also on the website. The link of the my role is given on the website, and you can also contribute to your alma mater. With this, we are again thank you to all the participants for making to coming to this iconic building BKC ICI on the Saturday morning, and making us program a successful program. Thank you all.